Hello, today is the 30th of September 2023. We'll do our disclaimer, we'll go over our calls, and we'll make some predictions. It's my trading plan for Monday, which is the 2nd of October 2023. It's a plan, it can be wrong. Trade at your own risk. The middle of next week I have personal business. I should still be able to do videos. I just won't be watching the market all day, every day. Look for the pattern with the early high, which is this, and Monday's pattern should also have the early high. We said that there was a target, 4287.04. I'd be happier if it didn't print, and when we gapped up, the number stays on the table, but not the time. Doesn't mean it won't print Friday, just means I'm not predicting when it will. When it did print, and there was support under it, so it actually worked, even though it didn't have to work on Friday. Friday, this is what we said. We said regardless of what happened, I think we'll have substantially higher prices coming up. Nothing that happened on Friday has changed that, as far as I can tell. When this is either a rally into the close or a straight line drop. Well, the rally into the close didn't happen, but what counts isn't how we close, but how we open Monday. We open up and take this high out early. That's the normal pattern. You can argue that's a straight line drop. It certainly is, but when you have the straight line drop pattern, you usually have a weak close. You don't normally have a recovery over all these lows. Now, if we gap down and undercut this low fast, that takes care of that. But the odds are good. We're going to trade outside this range pretty soon on Monday. And if we don't, the odds are good. We're going to trade in a close little change and make the move on Tuesday. But I think the odds are better. We're going to move out of this range on Friday because this didn't really, on Monday, because this didn't really play out the way the pattern normally does. MEJT said that this move up wouldn't stick, said the move down wouldn't stick, and that's already played out. The general idea was we made a major low last week, and we have a rally leg in progress. I'm going to stick with that interpretation unless it gets invalidated. We have an ABC. This red line is a very important support resistance line. You can see this high here, these lows here, all meet at that line. We've dipped slightly under it. We've returned to it. It's kind of a line in the sand. That's support resistance. We move up over it. We've overcome resistance. That's what I think is going to happen, and we're going to get a good rally. We stop right here, and the drop's not over. So we have a critical time period coming up. Let's focus in on this leg down. Actually, let's focus in on what's happened after this leg up, because we have an ABC. Let's look at what's happened since. We had a good rally from last Wednesday. So far we have a standard 61.8% retrace. In a perfect world, that's where the drop stops. If this is as strong as I think it is, this low, that should be it, and we should continue higher. Now, if we don't, it doesn't kill the idea, but we're talking about what we'd like to see. We'd like to see this low hold. There's not just one way to count this, but you can count this as ABC. You can count this as ABC with good fibs. And if that's right, wave C up, whether you start to count, wave capital C up, whether you start to count it from here or from here, takes us into the 2350s cash before this leg's over. Here's this drop all day long. Let's look at the other chart. Here's this drop all day long. The dotted line is the close. If you look at the day of this low, in spite of dropping all day long, we closed over all these lows. So for now, at least, that's a rejection of the lows. We closed even over the lows of the day before and the lows of the day after. That closes over all these lows. All you have to do is maintain that, and that's a rejection of lows despite multiple attempts to take them out. Dropping all day on a Friday almost always follows through into the afternoon Friday and then into Monday's open. When you can't follow through, I think it pays to pay attention. This is the final day of the quarter. That's when a lot of mutual funds close their books. They have every reason to get losers off the table and sell, and in spite of their good reasons to sell, we couldn't close under any of these lows. With 7 minutes left to trade, we were even over intraday highs, and then you had a wall into the close. Well, it's perfectly obvious institutions aren't going to sell in a panic the last 7 minutes of a day on a Friday. You all know my opinion of walls. I think they're panic selling by amateurs. The professionals have to take the other side of the trade. And if that interpretation is right, they're going to get their money back and a lot more fast. And they're going to do it by gapping over this high. And if they gap over that high, ideally, look at the normal pattern from Friday finishing late and take out this high too. That's what I think is going to happen. And if it doesn't happen, it's going to be obvious before the open, and there's no reason to risk any money. But gapping up over here should take us over here, and then higher. And then, if that happens, and that's an if, we've overcome strong resistance, confirming this ABC down and taking us higher still. We do have mixed signals for the reasons I've said. We'll go over them once again. Monday's pattern features an early high, regardless of where we open. These are the patterns I expect to see next week. Friday's pattern should have had a rally into the close or a straight line drop. Now, we had a straight line drop, but the strong close does not fit with that pattern. Usually it's a weak day. If we gap and promptly undercut Friday's low, that rectifies that deficiency. We didn't get a rally into the close, but if we gap and promptly overtook the high of day, that would complete the normal pattern. I think it's quite possible we get such a move. We have a 61.8% pullback, and that's standard after last week's low. The recovery over prior lows, if reestablished at Monday's open, is bullish. There were a few prior lows we didn't take out, but we took out most of them. The wall into the close is typical of panic selling, and often we gap over the wall's high. If, that's an if, last week's low was as good as I think it was, we should gap up Monday and ideally overtake Friday's high early. And if that happens, I look for a move into the mid-2350s or higher on this rally leg. If we don't get a gap up like that, I don't really have a good plan, and it should be clear before the open if that's going to happen. So I think we're going to gap up here and go higher, and if we don't, it's going to be clear before the open. I don't really have a plan. It's the pattern with the early high. So far, this low looks like it's a major low and is going to hold and take us much higher before this legs up. And that's today's call.